welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point in time. Well, we are looking at mixed cues right now. While the Nikkei trades marginally in the green, we have seen red in China. So Shanghai down 0.4%, 0.5% cut for the Hang Seng. What does it mean for the SGX Nifty? Largely flattish, holding on to 10,500. But that said, let's take a look at what the derivatives market is telling us and what we can expect. We have Navneet Saluja joining us to give us a trade setup on the back of the same. Good morning, Navneet.
Good morning, Agam. Well, some respite there for the markets yesterday as the benchmark indices, at least Nifty and Bank Nifty, scaled higher. And we did see Nifty closing above the mark of 10,500. But still, there's a discount on the futures. And remember, there was no addition seen for the open interest, which is telling you it was on back of short covering the rally that one saw yesterday. Pull up Bank Nifty, where the weekly options expiry was lined up. It closed above the mark of 26,000, but the futures are still trading with a discount of almost 100 points. So just a caveat here, when the futures trade at a discount, that's not a good signal. And here also you did see 1% of cut coming in with regard to open interest. India Volatility Index, substantial cuts, a positive takeaway, 13.14. That was down nearly 7%. In terms of the put call ratio, yesterday there was an increase seen for both Nifty as well as Bank Nifty PCR. Nifty PCR rose to levels of 1.28, whereas the Bank Nifty PCR rose to levels of 0.96. Let's pull up the option strikes and tell you what led to this increase. Basically, there was more of put riding which came into the system. Remember, 10,500. This is sitting with maximum open interest addition, and nearly 9 lakh shares were added here. Nearly 6 lakh shares were added for the 10,400 strike, and unwinding was seen for a couple of call strikes like 10,800, which is sitting with maximum open interest. So for the expiry next week, watch out for the range of 10,500 to about 10,800. What did the institutions do? Well, they continue to create short positions on index futures, but if you look at the contracts, only 3,000 contracts were added here, vis-a-vis 15,000 which were added day before yesterday. In terms of index options, there was majorly unwinding seen across the board. So on call long, put long, and even for call short, there was unwinding seen of a couple of contracts. Quickly, let me take you through a couple of stock futures that's going to be in focus today. Jet Airways and Jain Irrigation, as mentioned yesterday during the countdown show, are the ones which have entered into the F&O ban for today's trade. Both the stocks saw fresh short positions building in. And also keep an eye on the oil and gas pack. I've just pulled up GAIL here. Reason being, the numbers came in yesterday, which was below what the street was estimating. So there were fresh shorts seen for GAIL. But besides that, you had stocks like ONGC and Oil India too, which were weak in trade. Back to you guys.
Thanks for that, Navneet. Well, let's talk about the fundamentals of the market. We'll get to the derivatives in a bit as well. But start off with Santosh Singh. He's head of research at Haitong Securities. He joins us right now on the show with his thoughts. Santosh, good having you. Thanks so much for joining in. We're just talking about the concentration in the markets and how IT and to an extent select financial names have held out the Nifties thus far, even though the mid caps and the small caps have seen some carnage. What have you seen in the results season thus far for some of the large cap financial names that have come out? Today we'll have Bank of Baroda, but that's not a Nifty name anymore.
Because the result season was really funny, as you may say. Some of the stocks where we saw huge losses, suddenly we're talking about actually 2020. It became a 2020 game actually. Everyone is coming up with a 2020 presentation, and next year the stocks are moving up 8%. So to us, it's not about what's happening in present. It's almost about people thinking about. It's a thinking process where you're thinking about 3 years forward actually, or 2 years forward, and believing what some of the banks are telling you. In our view, most of the numbers, if you look at, those were reasonably what we were expecting, that corporates will show bad results on the banking side. The retail ones will show good results. That's what happened. But yeah, for us, it was the market. So personally, if you ask me, I wasn't able to understand the market, what it was trying to do with the stocks.
Okay. What about the PSU banks, and what do you expect from Bank of Baroda to come out today? Would it be yet another quarter of some promises which have not been delivered, and some more promises about the next 12, or rather next 8 quarters?
I think no one is talking about 12 months because 12 months is too near, So we might again talk about next 8 quarters. That's what we're expecting, because this quarter result is bound to be bad across the board, because you had bond yields moving up, you had new RBI guidelines which will have an impact on the results. So all the things are not really good for this quarter results. So what you're going to look at is maybe again we might see 2020, because 2019 also doesn't seem like we are going to see 15% credit growth in the system.
Okay, well, Santosh, okay, I think just hold that thought. I think we do have the management because the iron ore producers have finally got some
room
to higher prices and high prices. The country's largest iron ore miner, NMDC, is charging more for the first time in 4 months. So has the sudden spurt in iron ore supply settled down, and will the trend continue? Joining us on the phone line from Hyderabad is R.K. Rao, the commercial director at NMDC. Good morning, Mr. Rao. Thanks for joining us. Can you tell us a little more about what the pricing is now turning out to be, and what kind of implications can it have for NMDC?
Yeah, this month, first of all, I would like to submit that we have changed the pricing cycle from first to the last week of the month. Henceforth, we'll be doing on the last week of the month. That's number one. The number 2 point is that the slight hike of about 4% in iron ore prices has been primarily due to the rise in the international prices and also the end-use market, especially the steel prices globally and within India, and the sponge iron prices. They're all on the upswing. And more than that, another important reason is that our iron ore is quite competitive and we are at a discount compared to imports on landed basis at majority of our customers' plants. So we wanted to correct that. And that's one of the reasons why we have hiked also. And if you see the discounts, what we are giving on the East Coast, around 25%, and for landlocked plants, it's around 30% compared to the imports.
Right. Mr. Rao, TRK Rao, good morning. I can understand that you would be competitive compared to imports. What about the domestic miners, and where would the pricing difference now be after you've hiked? And if there is a difference, if there is a material difference, could volumes for NMDC take a bit of a hit?
No, actually our focus is only on volumes, and only by protecting the volumes we would like to adjust the prices. As far as domestic this thing is concerned, in Karnataka, we are quite competitive compared to our domestic miners. In the East Coast also we are quite competitive, but only in the West Coast. For certain customers, the Orissa ore would be cheaper than the landed cost, NMDC's transport cost being too high. Otherwise, we are quite competitive.
So would you believe that even after this hike, you would remain competitive and volumes will not take a bigger hit than what you've already planned for or budgeted for?
No. There is no question of volumes taking a bigger hit.
Okay. Can you give us some numbers, one on what realizations would be as a result of this hike, and what do you expect volumes to be in the current quarter? There is still about a month and 5 days left for this quarter to end.
Actually, the current quarter, particularly, there was some hold up in Karnataka, not because of any other reason. There was some our major customer, Jindal, had taken a blast furnace maintenance. That's why there is slight hold up in their offtake. So this quarter should be all right for us. It is not that good as normally the Q3 and Q4. So, but normally we pick up from the second half. So the guidance for this year would be, last year we had done 36 million tons. This year we will surely do around 38, 39. That's about 7 to 8% growth.
Okay, Mr. Rao, thanks for joining us and giving us those updates with respect to the iron ore prices. That said, let's go across to our research team right now, and who's going to be joining us and giving us more updates with respect to, what we can expect in today's day of trade. Also, a whole host of earnings that we can keep an eye on. But let me start off with some key earnings that we're going to expect today. Sun Pharma is possibly going to be one of the biggest ones. Darshan, what are we expecting?
Yeah, so it will be a muted quarter. We are seeing a 6% degrowth as far as Sun Pharma's top line is concerned. 33% drop in the bottom line and 18% drop in the EBITDA, which means a margins of 21.6%. Basically, their subsidiary Taro, which is 15% of their total top line, 50% of the US sales, has already reported numbers which came in better than what the street was anticipating. Apart from it, the management has guided for flattish quarter-on-quarter sales and margins in the range of 20 to 22%, so it will be in that range only. Now, if you're looking at the US market, that is expected to be weak because of pricing pressure and competition. Absorica, one of the key drugs, is facing immense competition. There's volume decline, and market share loss in Glivec is something that will dent revenues, but that will be offset by the launch of Coreg that they did. Apart from it, the rupee movement also means that a probable forex loss is something that can be anticipated. India business, rest of the world, and the API, all of them are expected to report a single-digit growth this time around, but overall, US is a big chunk of them, and that is expected to be weak, which will be a drag on Sun Pharma this time.
Right. Other than Sun Pharma, Tech Mahindra is the other counter which is going to announce its earnings today. This will be post-market. We're expecting, well, relatively steady earnings, not unlike what we've seen for some of the other peers. We're expecting about a 2.7% uptick in terms of revenues. EBIT margins could improve quite substantially to around 13.6% versus 12.7% sequentially, and we could see about a near 1% growth when it comes to profitability. Now, what is behind these expectations is largely the enterprise business, which will lead growth. We can expect flattish growth for something like Lightbridge Communications, and Comviva is expected to see seasonal support come through. Do remember there could be about 100 to 200 basis points advantage playing out when it comes to cross-currency movements for Tech Mahindra in this quarter. What we're keeping an eye on, of course, is the new deals and trends in the telecom segment, which has a substantial exposure when it comes to Tech Mahindra, and commentary on consistent profitability in LCC. LCC has been a sticking point for Tech Mahindra over the past few quarters, and they have been talking about revival here, and we're going to have to wait and watch for more commentary to come through when it comes to Lightbridge Communications. So on the whole, we're expecting a steady quarter, no fireworks though. But let's head across then and talk about all the earnings that came through post-market hours. Nikki, you're talking about strong numbers?
Yeah, so I'm going to start off with the paper stock now. Most of these companies have reported good numbers. I'm going to start off with South India Paper Mills. Revenue is up by 30% and bottom line is almost up by 50% on back of strong operational performance. We're seeing an EBITDA uptick of around 27%. This combined with your higher tax credit that we've seen in the current quarter along with your other income has also led to a bump up in the bottom line performance. If you look at the second stock that we're tracking this morning, Sudarshan Chemicals, that's a pigment manufacturer company, reported excellent set of numbers. Revenue is up as much as 31% for this counter. We're looking at uptick of around 32% on the bottom line front. This comes on back of strong operational performance. EBITDA is up almost 70% for this counter. Now, lower other income lower other expenses along with your employee benefit expense, which is percent to your net sales, have come down. They have led to an operationally good show from the company. However, some amount of gains have been eaten into on bottom line front on account of negative other income that we've seen in this quarter. Moil is another good is a counter that we're tracking on back of strong earnings. Revenue up by 57%. We've seen uptick of 10% on the bottom line front. EBITDA is up almost 42%. This is on account of higher cost saving techniques that have been adopted by the company. This, along with the higher tax outgo, to an extent has ate into the bottom line performance of the company. Camlin Fine Science. Now, this is one stock that we need to keep an eye out given the kind of 12% decline that we've seen in the last 5 to 6% for this counter. Promoter shareholding of the company has also come down significantly, but then a good show for this company in this quarter. Revenue up 54%. We've seen the net loss narrowing down to 4% as compared to nearly 7% in the 7 crore in the corresponding quarter. EBITDA, the company has turned around on operational front. We're looking at an 11 crore EBITDA profit as compared to a loss of 7 crore in the corresponding quarter. Sequent Scientific, that's our last number that we're tracking. Revenue up by 18%. Net profit is also higher. That's account of an exceptional income that we're seeing. But operationally, too, the company has put a good show, 36% uptick to a number of 31 crore as compared to 23 crore in the corresponding quarter.
So those are some strong numbers coming through, but what about the weak earnings, Shraddha?
Agam, just two on my list. One is Cummins India. Overall, it's below analyst estimates, so it's a miss in this quarter, even though the performance is largely flattish. So revenue growth of 4%, net profit growth of 2%, EBITDA is flat, and EBITDA margins have contracted by about 50 basis points to 13.9%. Triveni Engineering has also reported a weak set of numbers in line with what we've seen for other sugar companies. So revenue degrowth of 18%, net loss of 102 crores versus the profit in the corresponding quarter previous year, and that's largely been driven by a EBITDA level loss of 114 crores. That apart, the board, they have said, has advised the company to consider monetization of unutilized financial and other assets. So I'm not sure if this will have a play, with respect to the stock price movement, but weak numbers.
Right. Well, so plenty of stocks out there to keep an eye on as we move into today's day of trade. But Santosh, I'm going to take the IT sector forward with you. We have seen some strength come through. Of course, the strength, a lot of this is attributed to the gains that we've seen in the US dollar against the Indian rupee. To what extent can this strength be attributed to just this cross-currency movement, or is there anything else that's also playing out fundamentally for the IT sector?
First and foremost, at the beginning of the year, there was some recovery visible in the IT space as well, in the global IT space, and mainly amongst the large cap stocks. But that was, in my opinion, that was played out to the vast extent by the time of the results. And currently, what's happening is mainly because of currency movement, and more than that, in our opinion, it's a lot to do with flows. Because the problem is the flows are getting deployed in few stocks, and IT is one of the beneficiary of those flows. So clearly it's a reallocation where, because of SEBI guidelines and all, the mutual funds has to change some of the portfolio mix as well. That's actually benefiting IT stocks quite a lot.
Okay. And of course then a bunch of others. We'll talk about United Spirits and the likes as well, but it's 8:45, so that time of the show, and we dwell a bit on the technicals and the derivative side of the market. Joining us now, Gaurav Bisa, AVP at LKP Securities, as well as Raja Venkatraman, Chief Technical Analyst at Chartwise. Gentlemen, both of you, good morning. Many thanks for joining in. Gaurav, let me start off with you. However, we looked at the strength that we saw in the market yesterday, and considering that we'll start off flattish, what would your approach be to trades taken yesterday, or a new trade that you would advise today?
Good morning. We had seen good amount of correction, and we have bounced back from the immediate support levels. Having said that, we need to have a weekly close above 10,500. Remember, the 10,500 put option come out at a very high OI concentration, and now we gave a close below these levels for 2 or 3 sessions. So it would be very important that we close about 10,500 today. In this case, we can have a small technical bounce back or a short current relative 10,560, 580 in a day or two. The fresh trade would be more lucrative on the Bank Nifty for the reason that we have seen Bank Nifty bouncing from crucial support levels of 25,600, and it's now trading just about the support additional level of 26,000. If it sustains 26,000, I would not be surprised at heading another 200-300 points up in a day or two. For me, buying a call option in Bank Nifty would make more sense. For Nifty, if it sustains 10,500, further up move can be seen. If we are again trading below 10,490, 485, then we may try to retest previous lows of 10,430, 420.
Raja, good morning. How are you using trade on the Nifty? We did see some movements. Of course, eventually we saw some weakness, and yesterday we saw the Nifty move back about 10,500.
Correct.
What's going on?
Actually, if you observe the entire month, the entire good work done in April was actually undone in the month of May due to various domestic and global triggers. And the entire market breadth for the entire May series has been weak. And the interesting point to note in this month is that the sentiment is actually disturbed in the sense that the retail patronized stocks like Jet Airways, which has fallen down by almost 45%.
Right.
Indigo, which has fallen down by 30%. Century Textiles over the last 3 months has fallen down by 25%. And the large caps which played a part in April are nowhere in the scene right now. So even as of this week, when we are talking about a mild bounce back, the 80% of the large caps are negative.
So then what's the kind of position that you would take?
So right now what we foresee is that there is still some pain left in this market, and that could actually hold back any kind of recovery. So any mild recovery would see some selling into. And for the Nifty, we reckon that this is going to extend. And the traders who have been patronizing these stocks are not in the money.
Yeah, sure.
So that's why this entire month has witnessed the traders have been at a loss, and also the mid caps which have fallen down quite heavily, they are also at a loss. So any rallies will witness selling. So, and even if you see on the options strike, they have actually moved down to 10,800. And what we foresee is that there should be some more pain. And on the technical side, we see a pitchfork support around 10,340, and there is a Fibonacci support level also at 10,340. The 200 DMA is also coming there. So around 10,310.
So what does one do? That's the question, Raja.
Yeah. So what I'm saying is that buy on dips.
Buy on dips.
Yes.
But not today.
Buy on dips and sell on rallies. And
is the rally yesterday good enough to sell, or would you wait for some higher levels? Is the question.
The question is the answer is that on right now any rally should be used to sell into.
A rally if it happens today, not at the current levels.
Yeah. Any move below 10,450 should be sold.
No, but then that's not a rally, right? I'm asking you.
I'm saying if it rallies towards 10,600, you should use it to sell.
Okay, fine.
Yeah.
Okay.
So right now it's a weak market.
Okay. In light of all of that, what about specific stocks to watch out for? Gaurav Bisa, what would be your trading recommendations for the day?
The first recommendation would be buy on Wockhardt Pharma. We have seen a lot of these pharma names giving a bounce. Whether these bounces are going to be held on is a different question, but Wockhardt Pharma for one is looking interesting. We saw a good amount of correction from highs of 750, 800 to around 610, 615 if I'm not wrong. We have seen a bounce back from those levels. Some amount of short covering was seen. It's now followed by minor longs, and a good amount of over addition is seen in 660, 680 call option. This generally means that a small bounce back cannot be ruled out. One can have a small stop of 658, buy Wockhardt futures for target of 680. If 680 is held, I think it can be one of the best performing pharma names for next 2 trading sessions. Second would be Ceylon MFSL futures. It has been falling consistently. Also, we have seen 2% over addition happening. Fresh shorts are seen getting built. Almost on the verge of a breakdown. It's trading just about the crucial levels of 458, 457. Below this, it can even test levels of 440, 435. For immediate targets of 450, one can sell MFSL for with a stop loss of 465.
Right. Raja, and what stocks are you betting on?
Yeah, I would take a cue from IT, and I would like to recommend KPIT as a buy. Post a recent consolidation, it has given a good breakout, and with the IT space holding out much better than the other index, I would wager a bet on buy side on KPIT.
All right.
And since it's a mixed market, a one buy one sell approach is recommended. So I would recommend a sell in Bharat Forge. It's made a double top, and the recent breakdown, and also coupled with its results, it's actually attracting a lot of selling interest. So sell at current and sell on rallies is the approach which one should adopt for Bharat Forge. And on the downside, we expect a target of around 620.
Okay.
Yeah.
Well, that said, Santosh, I do want to take the point forward on the oil and gas space, specifically ONGC and oil. We've had news about the government's proposal of taxing some of these companies. What do you make of this? And, well, the potential outlook on some of these companies, should we see this proposal come through?
I think with oil and gas, the real problem is that it's too political. Okay, that's because on one hand, the government wants to show that they did the reform and they're sticking to the reform. On the other hand, you have got petrol, diesel prices, almost petrol touching 84, 85 rupees in Mumbai,
right,
which is an all-time high. So what the government do? So either they can sort of tax the oil market, subsidize the oil, start again subsidizing the oil marketing companies, which will be seen as a government tracking back on reform, which will be a problem.
Right.
Or the other way around is ask for some subsidy or ask for some money from these oil producers. Something like an ONGC and all. So I would believe that in the near term, for at least a year till the time elections are done, the entire oil and gas space is going to be in trouble from a stock point of view, because government itself, if crude starts coming down, then you're again fine. But if crude stays here, the entire space is going to be in trouble.
Okay. I'm taking a cue from one of the stock recommendations made. Santosh, you would have guessed it, Max Financial. Under some trouble recently. What would your belief be for Max Financial, as also maybe some of the other insurance makers?
So I would not go on what's happening today, tomorrow, day after tomorrow. That's not my call. But yeah,
if you use this weakness to build a long-term.
So as I was saying, mid-cap is in pressure. That's one part. But other part of the equation is Max Financial as a company is showing you tremendous numbers. Okay. Last year they have closed their new business premium at around 23% growth rate. Then again, I think today is the results. You will find that results will be one of the best in the sector. So on a value perspective, the company is creating value. Now it's up to the market when they start showing it in the prices. My personal belief is in a 6 to 1 year time, prices always show the value which has been created by the company. So in the near term, whatever the pressure is, given the sort of numbers we are seeing from Max Financial, and that's the reason it's one of our topics, because it's trading at huge discount to the entire sector. Whereas its numbers, if you see the numbers, it's actually either at par with the best and better than the entire lot.
So would you believe that if somebody wants to buy into insurance, because everybody keeps on hearing that insurance is a pocket to be in from a next 5-year, 10-year perspective, from that perspective, is Max Financial a better bet, or would you look at maybe SBI, maybe HDFC Life or ICICI Pru, or maybe some of the general insurance companies?
So GI is in space, definitely. It's just like consumer space, actually. If you will not get any volatility, you're not going to get volatility, you're going to get consistent EPS growth over 10 years period. You can expect 17-18% sort of EPS growth. So that's a space which is like consumer. You can pay high valuation, stay in that space. Within the life space, what you need to look at is the innovators and who has the ability to first innovate and grow the margins, because growth is going to be cyclical. So what you need to see is that who can grow the margin and where the profitability is not cyclical. And in our view, HDFC and Max, these are the two companies where profitability is not going to be cyclical. So if you want to be invested, HDFC is definitely expensive, but at the same time, it's HDFC brand which gives you some comfort. So that's one part why there will be a premium. So these are the two stocks where if I'm looking from a 5 to 7 year perspective, I'll stay in.
All right. Raja, are you tracking TCS or Infosys right now? Because we have seen some strength come through. And I'm asking you because you've spoken about the IT sector in general.
Yeah, TCS has given a good breakout. And ever since its results which came out the last quarter, it has moved on from strength to strength.
Right.
And considering its weightage on the index as well, there have been large patronization from the institutions also. And the upside, we are looking at a target of around 4,200 because the potential is quite good. So even the investors as well as institutions are participating. And overall on the weekly time frame as well, it has crossed important averages, and we are looking at a good positive trend in this stock.
Okay. The other stock I want to address is Bharti Airtel, which was the top Nifty gainer in yesterday's day of trade. Gaurav, how are you tracking cues in Bharti Airtel right now? We've seen some strength come through. The derivatives market indicated short covering. Are we expecting this strength to continue?
Of course, we can see some more bounce back in Bharti Airtel, and as a disclosure, we have also recommended a BTSC trade in Bharti Airtel. It can move towards level of 378 to 382. One can buy, have a stop loss of 368. I think for a pullback rally, it can be bought, but if somebody wants to play for a reversal sort of, I think that might not be a very good idea. But yes, for reversal, the trade looks quite interesting.
Okay. A lot of queries on autos. On our social media pages, there's a query on why Motherson Sumi is doing what it is doing well. Motherson Sumi fell because of the numbers not being up to the mark, at least below what the street was working with, and lots of questions on Ashok Leyland as well. Do you track the auto space, auto components, and therefore the question would be for somebody who wants to look at Ashok Leyland, long-term perspective, could the market pressure create some more downsides for a stock which has rallied so much and arguably in the valuation front was looking a bit expensive at 160? Or if you have a long-term perspective, even these levels are good to invest into?
So Ashok Leyland, we have a sell on the stock.
You have a sell on the stock. Yeah. Why so?
And the reason is simple, because on the commercial vehicle side, the sort of bullishness which we saw getting priced in the stocks, we were not comfortable with that. So around 3 to 4 months back, we actually turned negative in this space, because our view is that Everyone is talking about commercial vehicle being a secular story. It's never been a secular story. It's always been a cyclical story. And what we are seeing 2017-18 numbers, and I was arguing with someone that actually the GDP from 2011 to 2017-18 on a nominal basis will be 3 times actually. But if you look at the commercial vehicle sales on a number basis, it will be the same. Yes, there will be some tonnage increase, but the numbers are still the same. So these are cyclical, and on the cyclicality side, we don't expect that this sort of bounce back we saw is going to sort of continue in the next year. And that's the reason why we have been negative on the space.
Okay, so negative on Ashok Leyland. Raja, if I can take a quick view here, Ashok Leyland and maybe CEAT. There's a question on CEAT. It's at a 52-week low. If you can look at the charts there very quickly.
Yeah. You want me to say on Ashok also?
Yeah, if you can.
Yeah, Ashok, I agree with him that it's really a sell. Actually, if you are intending to invest, then you should look in the range of 110 to 115 as a level to buy in.
Okay, so that's the view on Ashok Leyland, both from a trading and an investment perspective. Raja, if you can give us a thought on CEAT as well.
Yeah, CEAT has more room on the downside. The selling pressure should continue to the region of around 980.
Okay.
So right
980.
Now
it's at 1300 currently. You believe there is more room on the
selling pressure is just given a fresh breakdown, and the series of candles which are being reflected, the negative pressure is still quite high, and so
maybe some more downside.
More downside. Yeah.
You want to come in on CEAT or maybe any of the other tire makers?
Well, CEAT is at a very crucial support levels, and for immediate basis, I would not play for a very deep downside. It has a decent support at 1270, 1260 kind of levels. So I would not play for deep cut. Rather, I would just play for a technical bounce back, or maybe you can call it as a dead cat bounce for that matter. The reason is that it's already in the oversold zone. We have already seen positions getting built. Has already corrected from levels of 1600, 1650. So I think it can bounce again. I would be more comfortable in selling on rise. I don't see trend reversal sort of coming in, but I would be more comfortable in selling on rise for immediate target price of 1250, 1260. I don't think we are going to see too much of a downside on a very immediate basis.
Okay guys, just about 20 seconds left for pre-open, so I'm going to take stock of what's happening in the Asian markets right now. We were seeing mixed cues earlier in the session, and that is exactly how it's panning out right now as well. So, well, flattish cues for the Nikkei, and well, marginally negative for the Shanghai and the Hang Seng. The SGX Nifty, however, is largely where we took check off last time around, so that's unchanged, and that's having a bearing on the equity markets and Indian equity markets. By that, we're seeing about a negative tick in on the Nifty, about a 1% increase, however, on the Sensex, as you can see there. So it's the larger caps that is likely to see that momentum play through. But when it comes to the Nifty, well, largely flattish. So let's start talking about some of the key losers in yesterday's day of trade. Let's bring up ONGC and oil perhaps, because we did see some substantial pressure yesterday. ONGC is looking at a downtick of around 0.4%. Can we also take a look at Oil India and see whether or not there is more pressure building in? Yes, a likelihood of 1% decline there as well. Tata Motors was the biggest loser in yesterday's day of trade on the Nifty 50. And we are likely to see some short covering on the back of pre-open rates. We are still waiting for stability to come through in these rates. In terms of the key gainers yesterday, we did have a lot of strength in TCS and Infosys. Can we expect that strength to come through today? Well, TCS likely to open in the green, and for Infosys, well, a marginal red for now, but like I said, we're going to have to wait for these rates to settle down. And of course, Bharti Airtel was the top Nifty gainer in yesterday's day of trade. Can we expect short covering to come through today as well? Yes, that is a likelihood as per the pre-open rate. So these are some of the large cap stocks we should be keeping an eye on in today's day of trade. Will alcohol be one of the ones to focus in the mid-cap space, Neeraj?
Well, let's wait and watch. I mean, you were talking about how United Breweries and United Spirits could do well.
Right.
The others which have given a good set of numbers too, Som Distilleries, for example, when the numbers came out, touched a price of 300, right. Now at 253. I think Radico Khaitan 2 has come off. So the pressure that I think Santosh Singh, Raja and Gaurav Bisa have been talking about has been showing on some of the others as well. What's moving around in today's session? On the gainings, okay, 1% beverages has an odd rate. I think this will correct. Let me not talk about it too much. Gujarat Alkalis about 7.5% or 7.5% odd. Good moves there. There should be strength in Sudarshan Chemicals. Maybe I think the numbers looked okay. Let's see if the stock is reacting about 2.5–3% higher. Fairly good set of numbers. Kaveri Seeds, watch out for this one too. Not the losses narrowed, but the stock was about 7% because Monish Pabrai's fund bought into it. And some reaction happened yesterday. Let's see if the further reaction today or not. For now, looks okay. But United Breweries, as Agam already stated, is probably starting out like the man of the match. Likely to start off about 5% higher, though these rates are subject to change. So let's wait and watch. All over the place, really. Now about 3%. So these rates will correct themselves. Let's wait and watch. Lastly, I just want to mark one stock, Jet Airways, before we mark the currency. Jet Airways, which had a slam dunk in trade yesterday as well. Likely to see some more downside today. Well, let's wait and watch. The currency and the bond yields. Has there been some bit of a pullback in the rupee? Yeah, 68.21. So from about 16-month lows of 68.41 or thereabouts 2 days ago, 68.20, a bit of a pullback in the rupee for sure. Though this is not to say that this will continue. The bond yields at 7.86, they continue to remain stagnant on the hard side. Okay, before we move any further, let's get in Nikki Mirchandani from our research desk, who joins us with the top brokerage calls of the morning. Nikki.
Hi, Neeraj. So the first one that we're tracking is City Union Bank, Kotak on City Union Bank, where it has maintained the edge rating and has raised the target price for this bank to rupees 190 from 180, not far away from the current market price at 183. Healthy operating profit growth with stable performance is expected to aid most of the metrics of the company. ROE improvement, however, still looks away from the company. For 3 consecutive years, the company has been reporting an ROE of 15%, and that situation is not expected to change near-term future. Valuing bank at 2.4 times its book value and almost 16 times its 2020 EPS. The next on the list, we have Deutsche Bank on Jain Irrigation, where it has maintained a sell rating with the target price of 82 rupees, which means that there is still an upside potential of nearly 30% from the current market price. It says that higher polymer cost is expected to weigh down on the margins. The leverage, the net debt to EBITDA, is expected to remain elevated at 3 times versus the guidance at 3.8 times versus the guidance of around 3 times. Margins, however, also look at risk given the higher oil price. Back to you.
Thanks for that, Nikki. We continue to watch out for Jain Irrigation, which of course in terms of derivatives has also moved into the F&O ban, so we're expecting restricted trade there. But I do want to take up on some of these alcohol companies which have announced its earnings. Santosh, do you track any one of these, United Breweries, United Spirits? No. Okay, so in that case, well, I was going to ask you, is this the best way to play the consumption theme? But if you're not tracking some of these, then how would you play the consumption theme?
See, the reason why we have never been able to track it is we don't think it tracks consumption. There are too many variables within it. For consumption, what we're looking at, Britannia has been one of our top picks within for consumption. So something like Britannia, HUL or a Nestle, these are the stocks which we like to play for consumption theme, and something in the auto space like a Maruti. So these are the stocks which we look for while playing the consumption theme.
All right, and you're not concerned about valuations? Well, it's just one of those things.
One of the things which I think I talked about last time also, that on consumption side, if you're talking about something like a Nestle or a HUL, these are stocks where you can look at 15, 20, 30 years. They have a history of 150 years, 100 years. So you can actually do a DCF of a 50-year given the brand. So the valuations that's the reason the valuations have always been high. It has always been high. So that's one space I'm not really concerned. Yes, if I talk about autos, yes, the valuations can be an area where things start changing significantly in 5 years' time or 6 years' time.
Yeah, and they certainly look like at times they would do that as well. I think that point is well taken, Santosh. So what is it that you are going out and telling some of your top clients to invest into? You mentioned at the start that the mid-cap space may have some pressure. While we discussed about insurance as a pocket, I'm guessing that's not the top draw. What is the top draw at Haitong currently?
So, corporate banks are definitely not for the 2020 reason. That's not a reason we are asking investors to buy. But corporate banks have been one of our topics, given we are expecting the peak of the stress formation to have happened. We are not expecting our SBI to give 1% ROA in 2020, but yeah, 0.7, 0.6, 0.7% ROA. So that's one area we are quite bullish on.
Corporate banks both on the PSU and the private side?
No PSUs.
No PSUs?
Only SBI is the only stock amongst PSUs, because what we believe is amongst the PSUs, the real problem is not about stress business or anything. It's about franchisee.
Okay.
So the problem is franchisee. What are you going to pay for? SBI is the only one where we think there is a franchisee, and that's why you should be paying for something.
So then there is SBI, there is ICICI Bank, there is Axis, and there is Yes Bank.
Yes.
Right? What would you prefer?
So our top pick currently is SBI actually. SBI followed by an ICICI.
Wow.
Yep.
And these are preferred over the retail-facing banks as well?
Today, yes. As of today, yes.
That's some thought. Okay, thanks for that. What else? As the 8 minutes come to a close, we hardly see any movements in the indices, Agam. I mean, 1% higher or lower, at least on the Nifty level. Just that on the mid-cap end of the market, Wakrangi continues to go lower. But the gaining side too, Gujarat Alkali, Sudarshan Chemicals, 1 or 2 result reactions, maybe United Breweries up 4%. Were the results that strong that the stock would move 4% on open?
Yes, so we were expecting a great set of numbers, but I think it's come ahead of expectations. And a 32% growth, despite the fact that we're working on a low base, 32% growth when it comes to your top line growth on the back of a 24% growth in volumes when the industry volumes grew 22%. It's a clear outperformance, and I think that's the reason why we're seeing that uptick of around as much as 4%.
Interesting, 4% higher at the end of 8 minutes as the pre-open had settled down. It's United Breweries, which is looking like starting off on a very strong footing. Sudarshan Chemicals is up about 7% too, so that one hasn't done too badly. And Gujarat Alkalis, as I said, up about 9%. Raja, do you track any of these three names, United Breweries, Sudarshan Chemicals, Gujarat Alkalis on the charts?
Yeah, I've been tracking United Breweries, and what I've found is that it has been facing resistance around 1200 over the last 6 to 8 months. Now with a positive result also coming in play, and if it gives a weekly close about 1200.
By weekly close, you mean it should
by the
close
end of the
about
week
1200 today?
Yeah.
Okay.
So if it closes about 1200 today, then it could open the doors towards 1300.
So you would buy it at around closing levels today?
Yeah.
If it is closing about 1200.
So maybe 15 minutes post the open. If it's anything high above that, I would recommend a long in that.
Interesting.
Because the setup is quite good.
Okay.
It has consolidated at higher levels and it's giving a breakout.
Gaurav Bisa, both United Spirits, United Breweries, starting off very well today based on the derivative positions or the charts as you may have seen. Do you like them?
UBL, yes, that is looking much better, and I agree. Weekly close would be quite interesting if it's closing about 1200. For immediate targets, I would say if somebody wants to buy in future, definitely one has to wait for a dip. Do not buy a gap up of 2-3% higher. I would wait for a dip, but eventually the setup is looking quite strong. 8 to 10% up move cannot be ruled out.
Okay, gentlemen, stay on, and in moments from now we'll also welcome Devin Choksi on the show. But minutes away from market open, let's first tell you all that you need to know to stay ahead in trade today. The street will be watching out for Sun Pharma, Tech Mahindra, Bank of Baroda, BEML and Cadila Healthcare. And these companies will be reporting their fourth quarter numbers today.
And in the earnings that were reported yesterday, it has been a strong show for United Spirits, United Breweries, MOIL, Camlin Fine and South India Paper Mills.
In the list of strong Q4 performances, we also have Sudarshan Chemicals, Kaveri Seed Company, Pidilite Industries and Sequence Scientific.
On the other hand, Cummins India and Triveni Engineering post a weak March quarter.
And the new entrants in the FNO space include Jet Airways as well as Jain Irrigation. FNO ban rather.
And on the brokerage radar, we have GAIL as CLSA upgrades its ratings on stocks to buy from sell, while Kotak Institutional Equities raises its price target on City Union Bank to 190 rupees.
Okay. Santosh, final question from you. What about the mid-sized banks? The DCBs, the City Union Banks, maybe RBL in the same tower as us. What do you think of these stocks?
So we don't track RBL actually, so I'll not talk about that. Okay. But yeah, so within the mid-sized banks, actually the opportunity is quite high. But if you find the right management, the mid-sized banks are the place to be in. But it's sure that you need to find the right management, because there have been some mid-sized banks which has remained mid-sized for 15, 20 years. so that's one part of the problem. So that's where I would actually like to go into the small finance banks today, because that's an area where which has been actually beaten down. beaten down quite drastically over the last 2-3 years from the time of their listing when there was so much of euphoria. After that, they were beaten down. So the opportunity is still for them also, and it's for the these small banks as well. But small finance banks looks to me a better trade today than the ones which are in the main frame.
So which one would you buy?
So maybe an Ujjivan I can look at.
Okay, great. Santosh, so good having you. Thank you so much for taking the time out and being with us today on Indian Open. Really appreciate your time.
Thank you.
Okay, 3 minutes left to market open. Let's welcome in one more guest. Deven Choksi of KR Choksi Securities joins us right now on the show with his thoughts as well. Deven, good morning. Many thanks for joining in. We'll take your market open in a bit. Deven, but just let's kickstart this discussion with that one pocket that was in the thick of news yesterday, the upstream oil companies. If indeed what PTI is reporting turns out to be true, how big a negative for ONGC Oil India?
Yeah, good morning, Neeraj. I think first and foremost, we must realize that ONGC is not making any kind of windfall profit, at least in last 10 years. Even though whenever the prices of crude oil have been up, I think they have still not fed the market price. And in this situation too, I don't think that they are facing the market price as far as I think their supply is concerned. So situation of windfall tax doesn't arise for ONGC. To put things in perspective, I would rather like to think this way, that government, state government as well as central government put together, between two of them, excise and VAT that they are collecting on the fuel products. If you do the arithmetic, I think at $70 to a barrel of crude oil prices, the per liter cost of petrol is somewhere around 80 liters, and out of that 80 rupees per liter, and I think out of that 80 rupees per liter, somewhere around 39 to 41 rupees per liter is, I think, the share of excise and VAT. It's a case, I think, which requires to be seen, because I think when the crude oil was at $50 to a barrel, I think these particular taxes were significantly lower. I think not 41, but I think they were certainly in the range of around 27, 28 rupees per liter. Where is the need for the state and the central government to, I think, collect so much of taxes and I think pay for their expenses? I think they must cut down on those particular costs. According to me, there is a case for, I think, bringing down the taxes, excise and VAT to an extent of around 10 rupees per liter. Even though they cannot bring all the states under GST, I think still, I think they should bring down the taxes by 10 rupees per liter between excise and VAT. I think that should be the way to function, and not, I think, taxing the ONGC kind of companies at this juncture.
Okay. Stay on, gentlemen. So much more to talk about. Gaurav as well as Raja will take in some top picks from you after the market opens as well. But the markets look like starting off slightly positively, about 0.25% higher. Let's wait and watch if that indeed continues for the first 15 minutes of trade. But this is what we are doing on open, about 1/3% or 1/4% for the Sensex. Nifty Bank 0.1%. So it's a relatively flattish start. The mid caps and the small caps should come up on your screen. Underperformance yesterday from the broader end of the spectrum. Today starting off about 0.25% higher. So at par for the course and at par with the large caps. What about the heat map? Even Stevens, is it? No, more green than red. Not too many losers. Vedanta continues to grind lower with reason. ITC has a couple of percentage points of a downtick. Maybe Agam would know more, but I failed to see if there was any news. But yeah, some course correction for ITC today. What about the gainers? GAIL up about 3%, and IT continues to rise and shine. So TCS and Infosys, well, higher. TCS at some point of time will nudge the 7 lakh crore market cap too. Bajaj Finance marginally higher, HDFC Bank marginally higher. So 3 or 4 names to watch out for in the session today. But that's essentially the large cap picture. What about the mid caps and the small caps, or some stocks to focus on? Agam would have a bunch on his plate. I'll just point out 2 or 3 that I want to mark in the session today. Firstly, some of the top losers in trade yesterday, and they're starting off on a decent note. Jet Airways in particular, after slam dunks for the last couple of sessions and for the better part of the year, about 1.5% higher. The auto component companies about a couple of percent, or rather about 1% higher or thereabouts. In fact, Motherson Sumi now slips marginally in the red. What about the result, boys? Good quarter for both Kaveri Seeds. More importantly, Sudarshan Chemicals. 31% uptick on revenue and PAT is not a bad sign. 5% higher. And the liquor companies, which have had a strong quarter, start off on a good note. United Breweries 2.5%, but United Spirits, the big boy, 3% higher in the session today. Good start to that. Agam, what are you spotting?
Near 11% uptick in Gujarat Alkalis, and that's really standing out right now because we've seen heavy volumes already come through, and that is also the big gainer on the Nifty 500 right now. Once again, Cochin Shipyard is the other stock which is doing well now. It's advanced by another 5%, well above the mark of 500 right now, and we're seeing more traction in PNC Infratech. Now that's another stock which has been gaining on the good earnings that we've seen just last week, and well, it seems that investors are building on some of these gains. Eros International, one of the biggest gainers yesterday, continues to see more longs building in, up by another 4%. On the losing end, I am seeing more weakness in something like a Granules India. Well, it lost out another, lost about 7-8% yesterday and down by another 6% right now. And more pain coming for Pidilite Industries. Of course, Pidilite announced its earnings, and we are looking at a downtick of around as much as 2%. Do remember, it does also have some exposure to crude when it comes to its input costs. And Soba is also looking at some amount of weakness. Soba continues to trend downwards as well. And just one other stock right now on my radar is, Aarti Industries. That's down around 1.5%. But on the whole, the momentum is clearly with the gainers right now, considering the gains are substantially more than the kind of losses that we've seen in the broader markets, Neeraj.
Interesting. Let's we missed out on taking the top call from our expert. Let's first start and do that. The markets are starting off on a decent note. Raja, what's your opening thoughts? Any stock that you would recommend? I believe KPIT was a call that you did earlier as well.
I would still go in with KPIT because...
Is that your top call for the day today?
Yes, definitely. KPIT. Because IT is also in the trend and in favor. So I would be a buy in KPIT.
You would buy at these levels, 276, 277?
Some here and some on rallies to around 273. Because yesterday's closing was on 270. It's now shot up right at the open. Okay. Yeah, but still it's a good bet.
Okay. What about you, Gaurav? Opening thoughts and any stock that pops up on your screen, maybe your top call for the day today?
For Nifty, I think as long as it's trading up 10,500, the bias would be positive. I would be more interested in Bank Nifty, and it dipped towards 26,000, 25,980. I would be a buyer in call option. And the stocks, apart from Wockhardt Pharma, Syndicate Bank looks good. If it sustains 47, one can buy with a stop loss of 46.20 on the upside. 48.5 can be seen.
Okay, that's the view coming in, and that's Gaurav's top pick for today. We are seeing more traction in Infosys. There's no letting up here. Devin, if I can come to you on the information technology sector in general, I have been asking this question to a lot of experts. I want your opinion as well. A lot of managements have indicated double-digit revenue growth, but of course we've also seen the rupee depreciate against the dollar recently. How are these factors playing out, and to what extent is this uptick in information technology stocks because of the price, because of variables that you spoke about?
I think it is entirely due to the kind of possibilities which are emerging, for which I think the investors are starting buying IT. No, that's not the case, it looks like at this point of time. I think the larger part of the allocations probably also have happened from the trading funds who have started playing safe, and as a result of which they cut short their trade positions from the high beta to, I think, going into some of the low beta stocks, I think, where IT kind of a companies fall into. So certainly I think that is a move that they have taken. Fundamentally things have improved, no doubt, prospects are improving undoubtedly, but the fact is that they are not, I think, moving in a speed at which I think one would have loved it to be. They can register double-digit growth in some cases, and they would definitely have better opportunity in US and Europe markets, I think, given the kind of a digital spending that most of the corporates are doing. So no doubt some of the big IT companies are going to be in favorable situation. However, my own take is that I think they will probably have to start looking at some of the inorganic growth opportunities, particularly in the mid-cap space, where I think the companies are operating with a niche mindset and niche, I think, approach on certain businesses. So definitely, I think that's an area where they are growing faster, likes of KPIT, likes of Tata Elxsi. I think they are probably growing faster than some of the big IT companies. So similarly, I think in the global marketplace, I think you have some of the niche companies who are engaged more in the areas of artificial intelligence, machine learning, and cloud computing areas, probably I think they would be better off, I think, if they acquire some of these companies and probably grow faster. They fortunately have the balance sheet to do so, and I would like to look at, I think, this kind of possibility emerging for them. So yes, I think the strong performance is seen in the market price of some of the IT companies, but not necessarily entirely to the fundamental factors, as I would like to summarize.
United Spirits is 6% higher, and that's a big move after maybe a couple of disappointments in the last couple of quarters. So big surge out there. United Breweries is not doing too badly as well. So it's a good start there for both of these names. Devin, I don't know if you personally invest into some of these stocks or no. Unless I'm wrong, you probably avoid them. But if you analyze them, just wondering, the results for almost all of these liquor companies have been fabulous. Do they present a multi-year growth opportunity, and therefore is it worth investing into any of these? Because now we have the whole gamut of a small cap stock to a mid-sized stock to fairly large names.
So as you rightly said, Neeraj, I think wouldn't be able to, I think, tell more about whether to invest into them or not. But certainly if I look at the product and the product presence in the what you call the FMCG marketplace, you are probably seeing a larger amount of spending share happening in the area of the liquor products. And that's where I think one can argue for the sustainability of growth or growth in the business for some of these companies. Since I'm not tracking these companies and neither recommending for investments, I think won't be able to give investment rationale to any of these companies. But I believe that in general, the wallet share is increasing for the liquor companies as far as their product spending is concerned by the consumers.
I appreciate that, and Devin won't want you to do anything otherwise. We started off, Devin, this conversation about what's happening to the upstream companies. What's the view on oil marketing companies as well at about 8.5 times 1 year forward? Is the pain largely in the price, or will the market pressure that seems to be imminent continue to weigh in on these stocks as well?
See, I don't have much of an issue with the correction in the price now, and probably I think if the mark-to-market formula continues for the OMCs, then certainly I think they would be relatively better off. And given the proposition where I believe, for one, that I think the high prices of oil will not sustain at this elevated level. There may be spikes and there may be probably, I think, unnatural upward movements, but they may not sustain. How long it will continue in this territory, difficult to predict at this point of time. But I, for one, would like to believe that the stable price regime would be somewhere around in the vicinity of around $70 per barrel. Should that be the situation in near term to long term, probably I think the OMCs would be better off comparatively, as I would like to say. And current valuations definitely I think are not bad. They are looking good. Only one caveat in this particular proposition: you have the state election and you have the election coming up in 2019 for the country. In such kind of a period, I think due to the election related thing, 2-3 weeks kind of a what we call the price cap, where the price is not allowed to be changed, I think, which otherwise is getting changed on a daily basis, that will probably affect some of these companies for that period. So I think keep that thing in mind while I think looking at the possibilities for an upside into these stocks.
Okay, well, what we are witnessing right now is divergent trends when it comes to OMCs. So while IOC is showing us an uptick of as much as 1%, there is a decline of around 1% in BPCL. And curious moves coming in through. So Raja, if I can come to you on these ones, some of these stocks.
Yeah.
How is there more weakness in store for some of these counters right now?
Yes. Sorry. Especially between HPCL and BPCL, I would again reiterate my opinion on HPCL. There is a considerable weakness in this, and even in the previous times, previous shows, I have recommended a sell in HPCL, and every rally in HPCL is definitely a sell opportunity, and at least a 10% drop from here is on the cards.
All right, and are you tracking Hindalco by any chance? Because we're seeing an uptick of around 2% there as well. This is another stock which has been very volatile over the past couple of sessions, and well, it's currently trading at around 238. And we do know of analysts, at least on a fundamental basis, who are a bit wary of taking cues on Hindalco. What's your call here, Raja?
Hindalco, it's more, it's actually in a say 30-point range, say 225 on the downside, and say 255 to 260 on the upside.
Right.
So that's more or less the range for Hindalco. And over the last 8 to 10 months, it's more of a trading bet than an investment bet. So one should actually be looking at it for trading. And it's mostly reacting on positive cues which are emanating from the overseas commodities market.
Right.
And that reaction is always displayed on Hindalco. So one could actually be on the trading side in Hindalco rather than on the investing side.
Right.
Interesting. Devin, before we let you go, just a word on whether you're putting large money to work currently, or do you believe there will be a much better opportunity to put large money to work? I know timing the market is not a good thing, but I'm asking you a bad question. Do you believe that there could be a much more favorable time to invest considering all that's happening in the markets currently, or all that's happening on the macro front currently?
So I guess, Neeraj, I think it is going to be a company-to-company specific kind of a situation. Say, for example, company like Tata Motor, which we hold in the portfolio and we like to accumulate in this particular fall. It has already corrected significantly, and probably I think it might correct further, I think, with the market price or the sentiments in the market. Look at the company from a perspective of, I think, growth. You have the domestic market where the commercial vehicle segment is definitely, I think, showing a distinct sign of growth. The passenger vehicle segment in the domestic market, which was bleeding up till now, I think at least it has come to a level at which I think the company can smile now. You have the JLR portfolio, though little less growth, but I think still producing well. And you have in this result, I think, a one-off items for the write-offs that they had to do for the impairment. If you normalize all of this and probably look at the prospect, I think companies like Tata Motors would be better off. Similar ways, I think companies in housing finance, companies in consumer credits, companies in corporate banking where their main focus is retail and probably concentrate more on the generation of higher amount of margins. I guess I think they would probably not be getting affected with the market fall. And also understand one thing, that the current fall in the market is largely due to the withdrawal of money by the FIs who are basically putting money into trading funds. They are taking this money out of the trading funds largely because of the macro headwinds that they are facing on the currency depreciation, on the yield appreciation in the other parts of the world. So they are taking that money out. I don't think that FIs are taking money out from the investment portfolio. So if the market has to go down, it will go down temporarily on the technical parameters, and that could be a buy opportunity. So in summary, I can say that good quality stocks in this kind of a falling market would be a buy opportunity to aggregate into the portfolio or accumulate into the portfolio or average into the portfolio, whichever way you look at it. I think that is the approach that we continue with.
Okay, Devin, we'll leave it at that. Thank you so much for taking the time out and joining us and giving us that perspective. Really appreciate your time. That's Devin Choksi of KR Choksi Securities with his thoughts. Raja, before we thank you, one quick word on UBL. That's a stock that you said that at 15 minutes, if it's about 1200, you would buy it. It's up 6% now.
Yeah, it's up 6% now, and definitely it has justified our faith in this movement, and one should definitely look to buy it here, and also on declines towards 1225, which is a good support. I definitely look for it as at least a BDST trade or a 1 week trade, where you could look for the targets mentioned around 6 to 7% as a 1 week trade.
Okay, cool. 1 week trade. We'll probably reanalyze this stock when Raja joins us the next time as well.
Sure.
Raja, thank you so much for joining in today and giving us your thoughts as well.
Yeah, welcome.
UBL and KPIT are amongst the stocks that Raja Venkatraman is suggesting to go out and buy. Take a break on that note. On a note, of course, that the markets are doing really well for themselves, 0.5% higher. So the strength building continues from where we left off yesterday. Good show there. Take a break, come back. We talk about the state of the economy. Ira Duggal is in conversation with Jahangir Aziz of JP Morgan. A bit later on, speak with V-Mart Retail.